Hello, everyone. I'm Mateusz Krupa from mBank. I'm heading the equity strategy in our department of analysis, and I will host this panel. So our guests, you met already some of them. So Eva Miklaszova. From iShares, from Invesco. Mobin Tahir, you already met him. Wisdom Tree. Robert Sochacki from Beta Securities, our local representative. Coming already, yeah. Tomas Packa from Xtrackers, DWS. And Bahram Sadighian from BlackRock.
Just a word of clarification, Robert will join us for next discussion about the condition of the Polish market.
Okay, so maybe one thing about this panel. Of course, we've got great speakers here who can speak long and interestingly. However, please, let's keep it short and dynamic. Let's start with some general questions about the overall landscape. So what most important trends you currently see in the global passive investment markets, and how do you see them reshaping the overall investment landscape? So maybe let's start with Eva.
So good afternoon again. Many thanks for the question. So maybe I would start with differentiating the passive investment landscape and ETFs, because I spoke today a lot about ETFs. And what we see is actually demand for ETFs, so a little bit less mutual funds. The investors are looking as well in the passive space and are moving from the index fund and passive funds into ETFs. And I have shown already a couple of charts at the beginning, so that the global ETF market is growing rapidly, and not only on the global scale, but as well in EMEA region. So this is one of the trends, is the other ETFs as a structure, as a product, as a new modern way how investors can replicate passively the indices, but not only, as well actively, semi-actively, and with quant approach regarding the ETF. So this I see as one huge trend which will continue in the next couple of years in the future. Then the second trend, and I will keep it brief, is ESG. Probably you heard about this already, so what this means. So this is something we observe in the market, and we see as well increased demand for ESG from the investors. And now I can mention, I'm talking about ETFs. I'm actually watching the flows of what's going on in the market and what's changing in the market. And for example, ESG is a real trend, and year after year, the asset under management in ESG space is doubling in EMEA ETFs. And as well regarding the net new assets in the flows, then, for example, 2022 was over 60% net new inflows into ESG ETFs, and the years before, as well, strong inflows in ESG ETFs. So we believe that this trend will continue. And asset managers are launching a lot of new ESG products on the market in ETF space. So we have now over 500 ESG ETFs in UCITS, under UCITS regulation. And then maybe I can mention the last one. What we observe is thematic investing. And this is not only in retail space, we see as well demand by fund of funds for some thematic, mainly in kind of these environmental topics like clean energy, hydrogen, wind, and so on. So thematic is maybe the last huge trend we can observe. And it was in the past like more in the mutual fund space, but now we see as well in ETF space that the asset under management in thematic ETFs is doubling and is growing, and so on. As well, number of the products is growing, so we have now over 160 thematic ETFs on the market. So that would be from our point of view, from Invesco, the three like huge main trends.
Perfect, thank you. We'll get back to this ESG stuff, but you know, from a bit more, let's say, conservative point of view. Bahram, what would you say?
First of all, thank you very much for having us. I'm very excited to be here after 4 years really working hard getting all the ETFs registered here the first time in Poland. I started this journey in 2018 and getting the passive investment vehicle really registered in Poland was quite an interesting journey, and I'm so very delighted and excited to have now 180 funds the first time registered here in Poland. Talking about the investment trends or the trends in the ETF market, I think Eva said already quite a lot, but let me take a step back. I think I started quite a long time with BlackRock. I don't tell you when, because I think it's more than probably all the others here. But I had an amazing journey with BlackRock. But when I started with the iShares business, everything was about capital market weighted benchmarks. So we're moving away now the last 6, 7 years, and I think Wisdom Tree has got a lot of experience there as well as DWS Xtrackers and Invesco. So we've been moving away now from purely capital market weighted indexes or benchmarks, and are thinking more about having intelligent benchmarking and indexing. ESG is clearly one point of or one factor here. This is quite a huge trend, and we're seeing this is emerging also here in Central Europe. Factors is something we're looking at, so we're trying to get the factors of those benchmarks where we believe that it will have an outperformance in a certain time period. So we're thinking about really how can we go more from capital market weighted benchmarks into intelligent benchmarking. And now we're also trying to, what we're seeing in the US and also in Europe, to have combination of these things, ESG and factors, for example, or combining ESG and thematics is something where we're looking at. So I think the journey has just started. The next years, we're going to see a lot of developments there. A lot of, again, factors. We used to say smart beta. I like more the expression of intelligent benchmarking.
Perfect. Thank you very much. Next question would be, how can investors identify potential market inefficiencies and capitalize on them within a passive investment framework? Mobin?
So one important point to remember is that passive doesn't necessarily mean unintelligent. So you can still have a very sensible exposure to a certain market and do it in a smart way through a passive instrument. And that's why we're all here talking about passive investing, because we rate passive investing. One approach that we see has resonated with some of our clients is that idea of embedding expertise within a passive vehicle. So the idea being that if you want access, like I gave this example in my presentation about industrial metals, that you can have a passive exposure to the metals market, but embed certain expertise within that exposure, in that you determine which metals you want an exposure to, and how would you weight them appropriately. And these questions aren't easy to answer for us as an ETF provider, because we are investment people. We aren't experts in metals and mining and resources. So what we tend to do is we partner with external experts. Like in this case, a lot of the charts in my presentation, you might have noticed a footnote, Wood Mackenzie, and we rely on their forecasts because we aren't capable of producing similar projections ourselves. But what we can do is, by bringing in those expertise, offer a passive vehicle that's been built in a way that embeds those expertise. So that's really the key for me, that passive can have smartness embedded within it, and that can be an important consideration.
Perfect. Tomas, what would you say?
Let me maybe take it from a different perspective, because utilizing inefficiencies through ETFs, I mean, just what are we? We are solution providers. So we all have a huge kind of amount of investment solutions on the platform that can be utilized by the investors. And it's kind of a very, I would say, democratic tool, because it's there for retail investors as well for institutional investors. It really depends on, I mean, how do I come up with an idea of investment? What is the appropriate investment for myself? And I would just rephrase it a little bit, because, I mean, we need to define the world where we are, Is it enough to invest into global equities right now? Like, challenge MSCI World Global Equities? Or do we really have to kind of rethink the world as we know it right now in terms of breaking it down from just right now, unipolar status, very US-centric, to possibly a multipolar status in the future? So if you consider, the weight of China in MSCI World, would you know what it is right now? Yeah. At 0, because it's not a developed country. So we are kind of struggling right now with a few of definitions, kind of what is the definition of, I would say, the world portfolio. And going into the future, China will get a much, much higher share of the wallet. Just consider right now, India was in all the publications, it's the most populous country in the world. And, the weighting in all the capital market indices is actually not really there, just if you take a look at it realistically. So how can you use this huge product range we have for investors? It's to thinking a little bit out of the box, really question what is the status quo and what are the possibilities the worlds are really heading to. And maybe let's take some markets like Canada, like Australia, very resource-driven. So there are a lot of kind of a little bit different regions and markets to be at that could really make sense for the future.
Just let me add to that just one point. I think market inefficiency means that market participants don't have got the same amount of information at the same time. Normally, this is an absolute strong case for active fund managers. But how can you use it? Your question was, how can market inefficiencies be used by ETF investors? I think to Laura's point, you need to be very tactical. Yeah? You need to have the vehicles to understand at what time where you should be positioned and invested. And that's not quite easy for investors. I think it's important to get all possible tactical asset allocation support you could get from providers to understand your tactical positioning to balance out inefficient markets. This is one point. The second point I would love to mention is in times of stress, especially in bond markets or corporate bond markets, we're seeing that the spreads are widening up. And we see that especially ETFs tend to help investors to balance out these inefficient markets or distressed markets. It had become a vehicle of choice for larger bond investors as well to invest in times of stress and be able to get the liquidity they need. So to your question about inefficiency in markets, one point is really purely about tactical asset allocation, which you can do in a very efficient way with ETFs. And the second factor is really about in times of stress and when we see the market, especially the bond market, is becoming inefficient, you can use ETFs here as a vehicle of choice.
Okay, so obviously we are touching some tactical views and also strategic ones, long-term and short-term. So maybe from the long-term perspective, we've got a huge demographic shifts and such as aging population or the rise of the millennial investor, let's say. How does it affect passive investment, and how do you see it play out? Maybe Eva.
Thank you very much for the question. So I think now I would maybe talk a little bit more about investors versus products, because now we discussed the products mainly. So I would split it, so aging of the population and millennials. So first, the aging of the population. As the population ages, so the people need to kind of create reserves for their retirement. So, and I think this is one very strong point, and mainly in the CE markets, not in every country is second pillar available, not in every country investors investing privately for their pensions. And I think this is changing slowly in the CE markets, that the investors, and what we are doing here, all of us, is the education. So we try to educate not only in the passive space, ETF space, but as well on the mutual fund active market. So it's the education to explain our investors, retail investors mainly, that they should kind of prepare for the pension and kind of build up the capital and build up the assets. So we believe that it will be change the landscape, and investors will be even more and more aware about this need that they have to prepare for their pensions. And with the aging population, this will support the argument. The second point is millennials. So what we see mainly in the Western countries, but slowly as well in CE countries, is kind of online brokers, neo-brokers, and even classical banks are kind of offering new way of investing. So preparing kind of digital, offering possibility to invest via apps online and make it more like millennials, younger generation friendly. And I think this is the trend which will continue, and it definitely benefits ETFs because of the simplicity, of the cost efficiency and so on. But no, it's not exclusive for ETFs. It's just a way how the distributors are offering the investment products. And we see strong demands for neo-brokers in the Western European countries, and as well we see the movements of the classical banks in Slovakia, Czech Republic and so on, to offer and to prepare new modern kind of distribution offering to their end clients.
Tomas, would you add something to that?
To be honest, the markets we live right now are very much dominated by the big bank players on the market. And those are still limiting, I would say, the most efficient advisory of capital accumulation. So banks have their own interests, and ETF is not one of them, to be honest. So here we see a huge trend out of the society in the direction of how can I allocate my pensions, my investments more efficient maybe than what is the status quo right now. And I think this is something we are in the middle of. So very exciting to see kind of this kind of changes and the impact also on the standard old-fashioned, I would say, offering in the market. So there's a lot of going on. And to be honest, I don't think we are prepared for the millennials. I mean, yes, for millennials, just Generation Z and the kind of the young generation coming up, because we do not communicate to this kind of group. I don't think at all, to be honest. That's going to be challenging for us.
Interesting. Bahram, next question for you. So, of course, this is, let's say, for the street, let's say, for me at least, the outbreak of the generative artificial intelligence is impressive, and it will impact many different things, and of course investing. So how do you see that development of deep learning, especially how do you see that impact on investing and passive investing?
I think we've been seeing an amazing journey the last 2-3 years when it comes to technology. And technology is becoming a very important factor for investors, but also for providers and asset managers. Artificial intelligence is one point of these, and there we're just at the beginning. We're going to see definitely a few of these developments. But if I combine technology also with asset management or with investing, I think investment decisions in the future will be also based on technology. Technology can deliver you data, can deliver you some further insights. The possibility to access information is becoming much faster. And it's for all kind of investment decisions, it's going to be a very important factor. When we think about fund management per se and artificial intelligence and technology, big data is something, of course, a lot of asset managers and investors are looking at to really get information or gather information here. They need to understand where are the future trends, like my colleagues just mentioned. So the mega trends is something which has been based on big data, where we got a lot of information. What will be the future trends and what will be the future developments? Technology had been supporting there quite a lot, and I do believe that within the next years we're going to see further developments there. Also, in terms of indexing, and I'm sure my colleagues think the same, we're going to use technology, name it artificial intelligence or technology, we're going to use it to be more efficient in building better benchmarks, but also being more efficient in managing passive vehicles and ETFs. So it can help us really to save time, cost, and get more efficient there.
Impressive. Tomas, you would like to add something?
I think the topic is it's already happening. That's something we are in the middle of the development. Because, I mean, AI, we have to define what do we understand under AI. I mean, ChatGPT is impressive, but it's still kind of a game tool, what to do with that. You know, just what's going to be the real impact on our lives, on the jobs. But AI, there are so many AI utilizations already right now being used in the market. And we are already using AI in our ETFs. So the index methodology, like putting up the index, and also what colleagues have been mentioning, yes, it's about kind of an intelligent way of composing the index for a different thematic investing or idea. And for example, the thematics, it's the best example. For example, our AI and big data ETF is using crawlers, self-learning crawlers, that are analyzing all the available patent data. And I cannot myself analyze 3 million patents and allocate those to the companies. So that's what AI is doing for us and giving us kind of this big data or this data edge on how to compose the ETF. So that's something we don't have to wait for, that's already happening. This vision of having AI trading by itself, I think that's something we are going to wait for a much longer time.
Thank you. We are getting to the next question. I promised we will touch this ESG themes, and I guess all of us here wouldn't say normally a bad word on that. Everyone loves ESG and money is pouring into it and so on. However, there are people that don't think that way. So let me quote Professor Aswad Damodaran's view that the ESG is the most oversold and overhyped concept in the history of business. And what would be your response to Professor Damodaran? Mobin, would you like to take the question?
So I'd say if you are using ESG as a tool for virtue signaling or promising a certain performance, then you've got it wrong. But if you're using ESG as a tool to support the conversation of how can capital make a positive impact on the world, then you can't have enough of that conversation. Take, for example, plastic waste. There are 14 million tons of plastic going into the oceans worldwide every year. Now, a question about can we structure societies, particularly emerging markets where most of this plastic waste is coming from? Can we structure societies in a way that people are incentivized to put their plastic waste towards recycling? There's sufficient logistics, and then there are companies that can actually make the recycling happen. All of this conversation is conversation that needs to happen, and this, progress needs to be made to avoid 14 million tons of plastic going into the oceans. And we are a long way away from eliminating that problem. So you can take ESG as a tick box exercise, or you can use ESG as a tool to determine where can capital actually make the most impact on changing the world. And as representatives of the investment industry, we control a huge amount of capital, and that capital has huge potential in making those contributions. So it shouldn't just be a tick box exercise. The ESG conversation needs to go further and see how your investments are actually being deployed and what change are they actually enacting.
Perfect. Tomas, I think your presentation will be next on impact investing, so I guess you will cover it. So maybe Eva would like to add something here?
Maybe I would maybe drift a little bit from the question, if I may. And in the last couple of years, as we see it, I think, first of all, to make clear, Invesco thinks that ESG is important, and we are launching new ESG products on the mutual fund side and on the ETF side. But let's talk about performance, maybe, because that was something which a lot of investors kind of make nervous in 2022. And 2021 was perfect, so everybody was happy with the ESG ETFs or ESG funds. But 2022 surprised a lot of institutional, retail, whatever investors. And between us, like asset managers, we kind of, as it was already described, look at, okay, how we can provide most green possible ETF product on the market as possible. So to kind of discuss with MSCI providers, okay, let's add here maybe PAB, let's add here more ESG score, look maybe on the social, don't forget governance, it's not just about E, and have this discussion to provide with the best ESG score, with the lowest carbon intensity ETF on the market, and then another provider try to improve the index and work again with MSCI to provide on the market something even better, and so on. And that was kind of, I would say, run for the best ESG structure, ESG kind of products, ESG indices. What we see now after this kind of wake-up call in 2022 at Invesco, that a lot of, I just don't want to call it like that, but a lot of indices are not very smart constructed. And it was already touched on today on the smart, intelligent construction, and factors as well been mentioned here in this panel. And what we are looking at is to kind of look more from the semi-active, maybe quant approach to construct these kind of ESG products with very high ESG standards, but construct it smartly. So let's look at, okay, what is my factor drift actually when you are constructing ESG ETF or ESG mutual fund? And usually when you look at the very green indices, you see, oh, well, so of course, obviously, my value factor is significantly underweight. And it doesn't mean that it has to be like that, because, of course, you exclude controversial companies, energy, and so on and so on. But there are many and plenty as well green value companies on the market, and you can, by the smart portfolio construction, kind of move more to portfolio factor neutrality and a little bit smoothen the kind of the differences in the performance of the very dark green ESG indices and non-ESG benchmarks. And you can do this on the equity side, of course, but as well on the fixed income side, it is possible to look at the construction and to see that your spreads are in the same level as non-ESG benchmarks, that your credit quality is similar, your duration is similar, and you can still have pretty good ESG score.
Perfect, thank you. And now let me ask you some set of questions that will be deliver to all our dear panelists. So how international institutions like yourself, ETF providers, see Poland versus the rest of Europe in terms of index adoption and this passive revolution? Bahram, would you start, please?
Well, that's a difficult one, to be honest. I mentioned already that I'm covering Poland now for quite a long time, and I remember like 7-8 years ago, the average management fees here had been for active funds had been 2, 3, 4%. So that has come down. This has changed, and I'm very happy to see that investors, also retail investors, are more looking now on different factors like price, efficiency, transparency, etc. All the things which have been already mentioned by my colleagues here. I do believe that the percentage of passive vehicles and ETFs in Polish portfolios are still underweight. So now I expect these to rise, and we are servicing institutional investors, pension funds, asset managers, insurance companies, wealth managers, and I do believe this is going to the percentage of the usage of ETFs are definitely going to rise. Let me also mention that an observation we're making now the last 5-6 years in Western Europe is digital investing, so Digi and ETFs. And I expect to see these kind of developments here in Poland as well. And ETF saving plans is something which is extremely important. So the numbers in UK, in Germany, but also in Austria, where investors are using ETFs to build on wealth or to save for retirement is jumping up. And I do believe that we're going to see the same development here in Poland as well. I don't need to mention the advantages of having an ETF saving plan. Costs, cost average effects, etc. All these kind of things move people really from traditional investing more into ETF investing and ETF saving plans.
Thank you. Tomas?
In the past, we had a lot of discussions with our clients, active versus passive. What's the advantage for passive? What's the advantage for active? There have been huge discussions. To be honest, we are quite over that. That has been solved. There is active, there is passive. Both being used, both have very good arguments for that. The ETF utilization in the market, as Bahram already said right now, is very growing in this retail segment. So really people using these products for personal kind of investments and savings. The biggest one we see in the UK. There is no kickback, there is no kind of retrocession being paid, so huge utilization of ETFs. Now, Germany is the next one, picking up crazily. So the flows into ETFs there are getting really, really significant. Austria is maybe minimum 5 years behind Germany, even more. And Poland, I would say maybe 10. Unfortunately, this historical legacy of having very, I would say, strong active distribution, it's not easy maybe to break up that fast. So we still need kind of this, I would say, change in way of thinking, in communication, in education, happening on the floor here to be able to really generate some change here. But it's happening. In Poland, it's already happening. There are big players like mBank sitting there, really pushing this change forward. Still is going to need some time, but I think the direction is, or the momentum is the correct one.
Nobin?
It's funny, in a conversation earlier, it came up that there's a lot of appetite in Poland for short and leverage products. So clearly, there's an appetite for expressing tactical views, both on the leveraged long side and short side. And from our perspective, that was interesting to learn, because last year, without a question, it was a challenging year in investing markets. But as a business for WisdomTree, one of our most successful ranges was the short and leverage range. So people were expressing tactical views for short-term tactical bets, even at times when otherwise it was a difficult market backdrop. So clearly, Polish investor base had something to do with that business performance. But beyond that, of course, we are here, and we want to know more about the challenges that are facing investors in this market. And of course, my colleague Timo Storz is sitting right there, and we would love to hear more from all of you.
Perfect. Iva?
Thank you. So not to repeat what has been said already, to be brief, so we believe we are at the beginning of the journey. But the question is, what is our mission here? All of us. We are not here to compete to each other. We are here together as well with local players, local distributors, to educate the market in Poland, to educate the clients, to help to develop the market. That, as we discussed during this demographic question, that the clients and investors are able then to build up their capital for their retirement and so on. So I think this is our mission. This is our aim. What we are doing here as well today is to educate on, like briefly, topics. Every kind of ESG or thematics or smart portfolio construction, intelligent indexing, tactical asset allocation. So I think this is the most important of our activities in the market, and we believe we will help the end clients. We will kind of do our work well here, and we will whole as an industry benefit from that.
Thank you. And the last but not least question from my side, and I guess it might be the most interesting one for many of you here. So you mentioned that Polish people like these tactical trades. So I would like to ask you to provide your, let's say, ideas, one for the long term and one for, say, from the tactical point of view that you currently have in your mind that might be, you know, a good idea, or you personally follow and think this is the big thing. Of course, BlackRock mentioned this tactical short-term government bonds and inflation-linked. Mobin, you mentioned commodity super cycle for the long term on the other hand, but many metals there, maybe you like one of them the most, or maybe your favorite is totally different from these commodities. So please, maybe let's start with Eva now.
So let's start then with the long term. For retail investor, I would say that the basic rules of the portfolio constructions are the most important for the long term, that the portfolio is very well diversified, regionally regarding as well among sectors, that the period of the investment horizon is that the portfolio is really like built up concretely for every single client. So this is number one, important. And it doesn't matter if you put it together from mutual funds or from ETFs. We believe that, as I mentioned at the beginning, that there are a couple of longer-term trends which will be there and will stay here as a ESG, so it will not disappear. So we believe that there should be part of the portfolio as well in these kind of products, some thematics, and as well to look at how investors can achieve some, by smart portfolio construction, extra performance, so with quant, maybe some smart indexing and so on. On the short term, yeah, I mean, ETF, I come from fundamental portfolio management, so I've been doing 10 years of selling mutual funds. So, and I see the huge difference between the mutual funds and ETFs are really dynamic. And mutual funds are for a lot of investors like, okay, I select global mutual fund or, I don't know, American mutual funds, and I stick to it, and it's fine. Maybe some institutional players do some reallocations. When I'm working in this ETF world now, so it's so tactical. I mean, really, the investors every single week is different. And I am looking at the flows. And at the beginning of the year, we've been mentioning our, like, okay, European equities, maybe it's good decisions for the clients. So we saw a lot of flows there. Then recently we saw, okay, European corporate bonds being in demand of investors. Now we are seeing a demand for US treasuries. They are again hot topic for the clients. Then as well with commodities, we saw demand maybe beginning of 2022 when there was kind of this shock in the market in gold products and so on. So it's really tactical and it's not predictable, but you can still kind of like swim with the market. When you see the flows, when you see what investors doing, then you can as well.
Okay, so tactically, here and now, what would be your bet?
That's a good question. I would say definitely, depending on what the central banks will do. So when we actually move quicker through the cycle and the inflation as expected as our macroeconomists and tactical yesterday mentioned projection, then we expect we can then benefit from the longer duration asset classes in the equity space. So when we are peaking the inflation quicker, so in US we'll be then quicker out of the troubles. But when we are not so quick, then maybe the short duration asset classes, as mentioned today, in the fixed income side could be one of the choice of the investors. And then on the other hand, US Treasuries, we see the demand now in the US Treasuries, so could be as well one of the options. And we should not forget that longer duration US Treasuries is like very good place to hide in case there is some slowdown in the economy.
Okay, thank you. Mobin, one long-term strategic idea and one tactical short-term idea, please.
Tactical short-term would be carbon, because completely uncorrelated with any prospect of recession. It's going to be driven by regulatory developments in those specific markets. So no matter what happens on recession and what the Fed is doing.
Sorry, you mean carbon allowances?
Carbon allowances. So there are different carbon markets in the world, but of course in Europe, the biggest one is European Union carbon emission allowances, which is the most liquid market. So tactical would be that, and the long run would be industrial metals from the energy transition, but of course they could potentially have some short-term headwinds if recession hits.
Lithium.
What's that?
Lithium from those metals.
Within those, yeah, lithium is one of them, but copper is biggest. I mean, you could pick lots of them, but any of them would work.
Perfect, thank you. Tomas?
I'm not going to give you two. You know, I mean, just in the financial industry, we make things so complicated, to be honest. Let's keep it simple. I mean, just what is it all about? Let's grab some equities, put it on your portfolio, run a savings plan, and enjoy in 20 years. You will. And if it's now Europe, if it's US, I mean, come on, guys, we are speaking about like 2 months. So I mean, just I can't give you, I don't know where in 2 months the markets are going to be, but I know that equities has validation, it has dividends, it has income, cost average effect, super powerful. Let's go that way. And on the side, I mean, let's play. You know, let's keep this global topic in mind. Let's see where the markets will change. This global, I mean, decentrical approach, let's embrace it. Let's see where it's heading us. That's my point.
Okay. Of course, no one knows what will happen with the market within 2 months, to be honest. But still, wouldn't you be eager to provide any, ideas? It's
to be honest,
simple. You want it simple.
I have a great idea. Let's invest cash. Why?
Invest in cash right now. Okay.
Why?
So
because the banks do not give you the interest rate.
So we are defensive. Tactically and for the long term?
Look, I mean, just right now, one of the biggest interests we see from the market is cash alternatives. Why? Because the money at the bank, you lose out a lot. There is inflation. You don't get any interest. So the banks do not pass kind of this interest rate levels we see on the financial markets. Why don't you buy a cash alternative? You buy kind of Euro cash overnight. You just get over 3%, risk-free. Why not?
Okay, thank you. Bahram?
let me say that I'm not allowed to give any investment advice because my compliance officer will kill me, and I know it is also streamed to retail investors. But I would split the question into two parts. One, long-term for retail and investors. What can you do there? And what can you do here if you're a professional investor? I think long-term, you should think about a multi-assets ETF solution. Try to find a product that is doing the allocation right. Try to find a product that is not too expensive. There are also some multi-asset ETF products outside there, and you cannot go wrong with that. If you buy this on a regular basis, again, having a saving plan or also one-time investments, you cannot go wrong with that. And I think, to Thomas' point, putting cash to work, either in cash products or having your cash on saving accounts, putting it to work, this definitely makes sense. On the second part, the tactical traits you want to hear now, I think Laura Krupa is doing a much better job than I would do. There's so much guidance outside there. If you just read the research papers, you get much better tactical views. Just from my point of view, be nimble when it comes here to equity allocations.
Okay, so that's it. Maybe you've got some questions from the audience. We've got one.
Hello, Artur Wiśniewski, Stockbroker PL. I have a question about the ETF distribution model in area of investment advisory, so banks more or less, because there was a problem in Poland that this model wasn't too healthy because clients don't pay the bank directly and they offer those products which are best for the bank, I mean the upfront fees. But I can see that it's changing because some banks are trying to introduce investment advisory fee, which depends on the amount of money which client brings to the bank, which seems to be healthy. But I was quite surprised that the bank still offers the same products. I mean, the client is now charged twice because it's the investment advisory fee and also the upfront fees. So I was really optimistic about this investment advisory fees being introduced, but now I'm negatively surprised and I'm quite pessimistic. So do you have any idea what to do to solve this problem, to bring those relations between bank and the client to a healthy point?
Anyone?
Maybe I take that. I think we're seeing an evolution in the wealth business. So just like you mentioned, the development in fee-based advisory is something we're seeing in Central Europe. RDR has been something which has been already mentioned. So the ban of retrocessions for products is something which has been pushing really investors also into passive vehicles. Of course, you have to talk with the banks who are developing these wealth systems. But to my point of view, I do believe we're going to see a shift more into fee-based advisory and more usage of ETFs. And of course, it needs to be something from the point of view of the bank or of the provider that is not gonna take away your revenue streams. It has to balance it out. So a healthy mix of, let's say, in-house products from a point of view of a bank, so positioning your own products, and external providers or ETFs to bring down the costs would be something which would make sense from my point of view. But you will, we also see in Germany banks who are offering ETF-only portfolios, of course, as in addition to other solutions they have in-house. But this is a development we're seeing now in Germany and UK, and probably going to take a little bit longer in other countries.
But it's happening. I mean, European Union has this kind of push towards these retrocession bands, even though it is a huge headwind. But let's see where it ends. I mean, there are kind of also people knowing about this issue and addressing this.
Perfect. Maybe one last question from Mr. Robert Sochacki.
Thank you. We are all guests of Warsaw Stock Exchange here, and I was wondering, where do you see, because the trading of ETFs is being concentrated in the major exchanges, trading hubs, and where do you see the place of kind of regional exchanges? Not only Warsaw, but there are many such exchanges in Europe. Where do you see the place for these exchanges in this passive path of passive growth, growth of the passive products?
I'd say it's only hopefully going to go in one direction, which is the right direction, and that's primarily the purpose of us being here, to hear from you in terms of where the demand is, what your problems are, and the obstacles along that way, and you know, hopefully we can make progress in the right direction.
But to be honest, I mean, the local exchanges is the gate to your market. And these markets are going to get stronger and more important in the future. So the local exchanges is kind of really the place where also Poland and other countries can grow. The combination with the ETF is also an important one. I mean, maybe not to list the ETFs themselves, because it doesn't really make sense from the product perspective, but really having healthy markets, liquid markets, is great for the ETFs, because the sourcing of the underlying asset is much more efficient, and we all can participate or kind of, yeah, be efficient with that.
Okay, so that's it. So thank you very much, Eva, Movin, Tomas, Bahram. It was as dynamic as I expected, so thank you for that. And yeah, that's it. Thank you.
Thank you.